The following podcast is recorded and produced by Emerge, a media creators co-op.
Good afternoon, ladies and gentlemen. This is the Defion Productions podcast. I'm your host, the hardest working nobody in Bitcoin, Don. This is the week in Bitcoin, episode number 114. We're going to talk about a couple of things in this hour that we have together. Most notably, we're going to talk about what's going on with MicroStrategy, Michael Saylor. We're going to talk about Bitcoin's price action. We're going to talk about fear, uncertainty, and doubt in the markets. We'll start in the charts, where we always do, and we'll take a look at what's going on currently in real time at 6:30 p.m. Eastern Standard Time on the first day of December in 2025, where we see the Bitcoin price sitting currently at 86,800. We were through the weekend in the 90s, in the low 90s. Last night, right at the monthly close, weekly and monthly close, we saw a dramatic drop in the price of about 4K. It was around 91, and we dropped down to about 87. Earlier today, we were in the 84s, so we were a couple of thousand lower than we are actually right now. Looks like the price is settling somewhat slightly. If you take a look at the 1 hour, the 24-hour, and the 7-day, in the last 24 hours, we're down 4.2%. In the last week, down another 1.93%. Ethereum also down to 2,800. 7-day down 5, 24 down 6.4. Total crypto market cap sitting at 2.94 trillion. The fear and greed's actually up a little bit from the teens of last week, sitting at 20 currently. The market cap of Bitcoin at 1.7 trillion. What else is there to say in regards to the fear that's going on Bitcoin Twitter and Bitcoin social media right now? People believe we're in a bear market. Scroll through your favorite social media platform, mine being X, and you'll see many people saying 4-year cycle. We're going to head down to, you're seeing anything between 50K, and I heard even this morning a ridiculously crazy take of we're going down to 12K. Just crazy, absolutely nonsensical takes. Again, I stand by the fact that if this is going to be a bear market, and 2025 was basically flat and we never got parabola, I don't know why, if we never got parabola, that we're going to get the same 80% drops that we got on previous cycles. If this cycle doesn't look the same on the way up, why would it look the same on the way down? Many weird things happening. I want to show this video here. This is from, hold on a second. This video is from CNBC. They played this, I believe it was overnight, in the overnight CNBC world. If you're a CNBC watcher, you got the regular CNBC, then you got the one that comes on late at night. And this here is the host kind of calling bullshit on not understanding why the Bitcoin price is going down.
Smarty pants out there will say it's because of some forced liquidation, it's because of so and so, so and so. But when an asset class can move so aggressively, and I haven't seen any decent copy, and I'm going to say this, on CNBC, on the FT, on Reuters, on Bloomberg, on every one of those major market sources out there, I've seen no one coming up with a conclusive idea of why a major asset is down 6%. That, for me, is the problem with crypto. The fact that random events can move so aggressively and no one's got a clue why. Bitcoin down 5.6%. I haven't got a clue why. I presume someone smarty pants out there will say it's because of some forced liquidation, it's because of so and so, so and so. But when an
good questions. There really wasn't any news that would have caused us to drop the way that we did. Just the closing of the monthly candle, the closing of the weekly was really all that really happened. Liquidity kind of remains the same. There really isn't a lot of liquidity. So at this point, it really screams like there's like manipulation happening behind the scenes. What else can you how else can you explain this? The stuff that we talked about last week in regards to JP Morgan Chase, the shorting that may be going on behind the scenes, the outright stuff that they're doing in regards to new products that JP Morgan is creating. Like, I don't know. It's very hard to explain. It's, you got FUD like that's being thrown out there. And then, we'll show this video next of that this was making a lot of rounds on X yesterday as well. It's a snippet from an interview that Elon Musk did where he, in a rare moment talked about Bitcoin, because he typically does not. And he gives his thoughts. It's a 45-second clip
power generation
on Bitcoin here. So let's take a look at Elon in his own words.
Currencies, if you will, that are physics-based. So energy is the true currency. This is why I said Bitcoin is based on energy. You can't legislate energy. You can't just, pass a law and suddenly have a lot of energy. It's very difficult to generate energy, or especially to harness energy in a useful way to do useful work. So I think that probably we won't have money, and probably we'll just have energy, power generation as the de facto currency.
I will say it's difficult to listen to Elon Musk talk, the way he gets to his thoughts. He's such a smart guy, such a genius, but it takes him like a minute to get to what he's trying to say. Isn't it kind of odd, Rich? Like, I guess he's on the spectrum, I would assume. He's very autistic.
My wife's a school psychologist, so she's like, obviously she can't assess without testing, but she's like, he's got all the markers for, one of the different ones that she's kind of in her mind thinks that it is. And I think that's why he's able to solve problems the way he does, because he's very analytical, but he is, like, he's very slow to communicate sometimes, and I just find his hair transplants distracting.
Well, he's worth billions. Why wouldn't you?
I know.
Why wouldn't you do it? I mean, it's
no, but he does. I like the point that he's trying to make, that we're going to shift, gold and everything, and silver was always, king. And I'm not saying gold and silver are going away, but I do feel like this concept of energy is kind of like the last true resource. And so I kind of like where he went with that. And I haven't heard that thought of energy as a currency. I'm sure you've seen stuff like that before, but I haven't.
Yeah, Michael Saylor was talking about that at the beginning of his journey of being the evangelist of Bitcoin. It's the problem is the way that people think about money makes it so difficult to accept Bitcoin, because people don't truly understand money. There's podcasts literally called "What is Money?" It's so difficult for people to define what money is, and they don't understand money, that it makes it difficult to come to the conclusion that Bitcoin's solving something, because they don't know what the problem is. They can't define the problem. So it becomes hard to get to a conclusion like Elon was getting to in regards to, solving this energy issue, and how thinking about Bitcoin in terms of what it solves than just number go up is more of a thought experiment than just, I want to put, $100,000 into Bitcoin and I hope it goes up to $200,000. It's like so much deeper than that. And that's the place where it's hard. Like, it's very difficult for people to accept. While Bitcoin is in the greater crypto sphere is, dropping in value the last month and some change, gold and silver hit an all-time high earlier today again. I think it hit 58. I think that's where it was at, somewhere 57, 58. Gold is moving again today. It was at, last I looked earlier, 4,250. So traditional, quote unquote, old money, old sound money stores of value have been moving, while, Bitcoin's going in this other direction. And, we've talked about this on the podcast prior, that, that boomer generation where a lot of wealth is concentrated, that's their sound money. Like, to them, to most boomers, gold and silver is their escape from this crazy corrupt system of fiat. And, having a longer time horizon with Bitcoin, Gen X, Gen Z, the Zoomers, their sound money is going to be Bitcoin. And, it's going to take, a couple of decades for us to see the transfer. And I think, it's not moving fast enough for some people. Like, people are really feel like they should be rich and millionaires, in the next couple of years. And a lot of the people throwing these price predictions out there, make people believe that they're going to, that it's easy, and it's just not easy. Like, and you're seeing it right now. 2023 and 2024 gave people the false belief that, it's just easy money again, because, things went down to 15K, and then we made our way back up to 100K Bitcoin, basically doing a 7 or 8x from the lows of the last epoch. And people are like, here we go, we're going to 200,000, we're going to 500,000, it's like, it's not that easy, man. It's just, it's going to take some time.
Well, I mean, even if you look at the way, whatever, your concerns are with it, and, it's still, even with this bump in the road, like, and that's why I look at it, it's still, the growth of it, even in the 80s, is still tremendous, and it's still holding on better than many of the other ones are, and that's why for me, like, I'm writing it out, and it's funny, I have a different creator in the building that I work with, and we ended up on Saturday having a conversation about, he's in his early 30s, and he's talking about generational wealth, like, and that's what he's trying to acquire through what he does. He's a collector of sorts, and then he's a reseller, but he understands, like, he's trying to create, like, he's not trying to make money right now. He's trying to look at, how do I create money that's bigger than me, money that I can put aside, just keep putting that money aside in such a way so I'm creating generational wealth. And we were talking about the value of other things besides traditional fiat currency. So here's a guy in his early 30s, basically he's on Whatnot, and he sells his product on Whatnot, and he's getting to understand. So he's that guy in that 33 generation that's looking at, how do I do this differently than my dad and my grandpa did? And he's looking at that, this, and I said, well, my advice is really pay attention to crypto. Don't get into some of these other things. I go, but again, it's the same concept. It's like, but why is it down? I don't know why it's down. I said, but at the same time, everything gets down. Everything goes up and down. So you just got to be patient and do your homework.
Yeah, his mindset is right, but his denominator is wrong, because he's still using fiat to price generational wealth. So you're looking at things in terms of dollars, and the dollars is a melting ice cube, and you're accumulating more of the melting ice cube. And if you hold on to things that are dollar denominated, he'll be better off than most because of the mindset of trying to accumulate and acquire. But if he's not careful and he puts it in the wrong places, then he's going to be outpaced by inflation, eating things away, dollar debasement, eating away at things. So, you say crypto, I know what you mean. It's more just, Bitcoin. You want sound, scarce assets. And if it's not Bitcoin, then it would be gold or silver. And I'm not advocating, because I'm not a gold or silver guy, but that's how I got here. But it's better than, a Roth IRA or putting it in a bank account, getting 4.5%, just debasing away. Yeah, I mean, and it's good that the younger generation is recognizing that they have to do things differently, because the ones that aren't, that think that they're operating in this system that doesn't exist anymore, they're just going to get chewed up and spit out.
I still have conversations with people in that same generation, slightly younger, slightly older, and they talk about their house, and I'm like, that's their investment. And I'm like, I don't agree with that. I just don't think that your specific real estate.
Basic economics is a liability. It's not an asset. It's not generating any income for you.
Go play Sims and you'll understand that. Like, it's funny, people that play Sims have a better understanding about the risk of real estate than most people because of the way that game is structured. So it's kind of funny, but like, it's an interesting thing. At least I don't think a lot of people in that younger generation, the Zoomers and that stuff, that age, that those late 20s, early 30s, mid 30s are are thinking about finance the same way that my generation, your generation, like they're definitely looking differently at these things.
Let's show this less than 4-minute clip talking about our bond market so we can kind of get an understanding of what the problems are while we talk about the solutions.
The federal government just turned in its worst October budget deficit in history. Even worse than the COVID spending orgy, nothing stops this train. This is great if you own gold or Bitcoin. It is not so great if you or your kids pay taxes. The numbers come from Treasury, who announced they collected $404 billion in taxes last month, up nearly a quarter on the year, yet they spent $689 billion, as in they borrowed almost as much as they collected in taxes. That brought the deficit to $284 billion in a single month. Now, for perspective, that's twice the annual budget in George W.'s last year in a single month, and we thought W was bad. Keep in mind, this is with tariffs, which brought in roughly $30 billion on the month, a drop in the bucket against 284. The problem, of course, is Congress, who took 24% more of your blood, sweat, and tears, yet somehow managed to spend even more. For perspective, if our small government Republican Congress had simply held the line on federal spending, a reasonable ask after 50 years of promises to slash federal spending, the deficit would have shrunk by a third. Instead, we're now approaching $300 billion in a single month. Now, almost half of spending was Social Security and Medicare. A fifth was defense, which is probably 5 times more than we need for border security and blowing up drug boats. Another $150 billion, so 22 cents on the dollar, was welfare, from SNAP to Medicaid to cash payments and Section 8. This is all important because it makes poor people and illegals vote Democrat. Then the big one, debt interest. This soared to $91 billion on the month, over $1 trillion annualized, every last penny borrowed. In fact, last month, a quarter of every dollar you paid in tax went straight out the back door as interest payments to China and Wall Street. So what's next? Brought to you by I Trust Capital. A year ago, we had the perfect storm to cut federal spending. Small government Republicans finally had unified control of White House and Congress. Elon was eyeing trillions in cuts. And we had a president who was gloriously hostile to the federal government that, in theory, he controls. Yet, here we are with a record deficit despite paying 24% more tax. In short, it cannot be fixed with conventional means. Congress could pass a budget rule with teeth, maybe a balanced budget amendment, or Warren Buffett's idea that if Congress can't balance the budget, they all have to resign with lifetime ban from politics.
Never happen.
Of course, it won't happen, partly because the GOP talks a big game then spends, and partly because the filibuster requires both parties to agree when Democrats certainly won't cut spending. This means we are careening to fiscal disaster with coming periodic crises in treasury markets, each doused with fresh trillions from the Fed that will convert to ongoing permanent inflation, or even default when some enterprising politician realizes voters love the idea of stiffing China and Wall Street. Countries around the world are entering the fiat endgame, from Japan's constant yen crashes to Britain's ongoing game of chicken with bond markets. Note, both countries' deficits are half ours in GDP terms. Even with the dollar as the world's reserve currency, running $2 trillion deficits forever means it is only a matter of time till it breaks. And heaven help us when we get a recession and it goes to $3 trillion. Listen to all last week's videos in a single 20-minute podcast.
That last part is crazy. He's right. We get a recession and our deficits go up to 3 trillion instead of 2 trillion. It's just like we're just careening like off a cliff. And guys like me and guys much smarter than me are like screaming that there's a problem. And it's so frustrating when the rest of the populace just has their head buried in the sand and acts like nothing's wrong, and then calls Bitcoin a scam, or calls Bitcoin a Ponzi scheme, or says Bitcoin's going to zero. And it's like you're operating literally in the system where that's what you're saying is exactly what's happening with the dollar, with fiat, with the world reserve currency. That's just melting value away. You're going to say something, Rich?
Yeah, it's just, and people are, still posting on X and other places. They can't wait to spend their $2,000 they're going to get.
It's never
and
coming.
I'm like, what about the $5 that you were getting?
It's never coming.
Like but there's people that like
you don't
forget,
want it
like,
to come, but they're too
they
dumb.
Don't even understand.
They're too dumb to understand
Right.
that would be the worst thing if that check actually came to
I
them.
mean,
But
the
that's
one
another
thing I will
conversation.
say is that Democrats and Republicans both came out and said we can't afford to give everybody $2,000, and then they were like, it's not even we can't even afford to cut taxes. So like, they can't. They just can't. There's nowhere. There's and it turned out, at least by the reports that I read, that the Department of Government Efficiency wasn't efficient at all. They actually ended up costing the government more money. They didn't save anything because of the way they did it. They didn't even know what they were cutting, and it led to other problems and overtime and having to bring people back and all this other crazy spending. And then they went and spent all this extra money on government stuff that the one guy even mentioned.
When
ridiculous.
Elon left Doge, the amount that Doge saved was equivalent to the amount that was added to the federal spending on our defense.
It was almost
literally
dollar
almost
for dollar.
identical. It was almost identical.
dollar for dollar.
It was almost like it was like intentional that we're just finding the money to add to the.
It literally was like
Defense spending.
I'm gonna go through my couch cushions and find enough money to buy a pizza. And that's literally what it was. Like,
Yeah.
we go and pull out whatever we can find, or I'm going to go out, I'm going to go into my garage, I'm going to collect all the cans because I need $20.
It was so disingenuous.
But people acted like that was a big
From
deal.
the
and
start,
it wasn't.
From the start, it was so disingenuous because here's the problem. Elon Musk is smart. We just talked about that. He's one of the smartest men in the world. That's why he's the richest man in the world. You're telling me that the smartest, richest guy in the world doesn't understand how the U.S. government operates fiscally? And he's a beneficiary of many federal subsidies. You're telling me he hasn't studied that, and he played dumb. That I came in thinking I was going to save all this money, and when I got in there and looked under the hood, I realized it was way worse than that. Come on,
Well, we know.
like
that
if you
there was-
believe that, I got a bridge in Brooklyn to sell you.
One of the biggest things that got changed in his efficiency was at one point there was a thing, and it went till like it was saying Tesla, and then eventually it turned out it was electric cars. Like he changed it from Tesla to so basically he was able to get efficiency to buy, but change the terminology so it didn't sound like it was his company that was making money. And the same thing, with Starlink and things like that, and its involvement with NASA and all that shit. Like, so all that stuff, he came out and made himself look like he was this big star because he was going to cut all this stuff, and he really didn't. He just didn't. And so I don't think he knew what he was doing all along. And then he said, all right, and then he started to get some shit. So he's like, well, I'm going to go back. And his company was obviously getting a lot of negative publicity from it. So he really figured he better get out just because of the damage it was doing to his day job, so to speak.
Let's take a look at this tweet by Shinaka Anselm Peraro. Give him a shout out since we're going to read his tweet. This is about Japan, the chart that should terrify every portfolio manager on earth. Japan's 10-year government bond yield just hit 1.84%, the highest since April of 2008, up 11.19% in a single session. You need to understand what this means. For 3 decades, Japan was the anchor. Zero rates, infinite liquidity, the foundation upon which global carry trades were built. Trillions borrowed in yen, deployed into U.S. treasuries, European bonds, emerging market debt, risk assets everywhere. That anchor is now breaking. The Bank of Japan held rates negative while every other central bank tightened. They defended yield curve control while inflation returned. They printed while others drained. They cannot hold the line anymore. Japanese institutions hold approximately $1.1 trillion in U.S. Treasury securities, the largest foreign position. When domestic yields rise from nothing to nearly 2%, the math changes. Capital that flowed outward for decades faces pressure to repatriate. This happens precisely as the Federal Reserve terminates QT, quantitative tightening. Precisely as the U.S. Treasury requires record issuance to finance $1.8 trillion in deficits. Precisely as interest on American debt exceeds $1 trillion annually. 2 of the 3 largest buyers of U.S. government debt are stepping back simultaneously. The third largest buyer is China. When the world's creditor nations stop funding the world's debtor nations at artificially suppressed rates, the entire post-2008 financial architecture must reprice. Every duration bet, every leveraged position, every assumption about perpetually falling rates. This is not a Japanese story. This is a global story. The 30-year bond bull market ended. Most just have not realized it yet. And then there's the chart. Looking at it, going boop, 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 and then right back up. So the long and the short of like what's going on is since the great financial crisis of 2008, when the Federal Reserve, along with global central banks, decided it was better to save things than to hit the reset button, they decided it was going to be an era of easy money. And we decided we were just going to continue to print. Or, I'm sorry, we didn't decide right away we were going to continue to print. We decided that we were going to print. And then when Wall Street got drunk and intoxicated off the easy money, Wall Street decided that we're going to continue to keep printing because we like asset prices that rise perpetually. We like recessions that last months, not years or decades. So easy money flowed, quantitative easing was a thing, and here we are where market conditions are changing, but the ideology of our current administration is going to go back to quantitative easing. And as of today, quantitative tightening has ended. Today was the last day of that. And following quantitative tightening comes quantitative easing. And we have a president, President Trump, who's been very vocal, has not made it a secret that he wants rates to come down. He wants money to be free again. He wants rates as close to zero as possible. Are we going to go back down to zero? Probably not. But he's throwing out, and even some of the people in his cabinet are throwing out 200 to 300 basis point cuts during the next Federal Reserve regime. Over the weekend, a name was tossed out there. Hassett, I believe, is the name that is being tossed out there as the possible replacement for Jerome Powell. Hassett is very, very tight with Trump. Hassett has been very clear and very vocal on wanting to lower rates as well. And we just have this powder keg that's occurring with an administration that wants to bring things down, flood the markets with money again. And we've already seen what happens when we flood the markets with money. Inflation goes up. That's why, say what you will about Jerome Powell, and I'm no Jerome Powell stan. I think Jerome Powell is just as bad as the rest of them. But he has, in his defense, navigated things pretty decent after fumbling them so bad in 2022 and raising rates so late. When he finally did raise rates, he's held off fairly well and kept inflation pretty decent from when we were experiencing those, 9 to 10% 2022, 2023 spikes in inflation. We haven't really had it that big of an issue, and it's because he hasn't buckled to going back to zero rates like before, because he knows that shit doesn't work. And the Bitcoin community and the crypto community is sitting here looking, or at least, most of us, I can't say most, but a lot of us are looking at, the price of Bitcoin and the price of these assets going down, but knowing that we have an administration who's basically telegraphing that they're going to be giving us easy money again. We're going to have a Fed change of regime that's going to be lowering rates. Printing is going to be happening again. And when they print, the money flows to the assets. The middle class gets squeezed. People holding dollar-denominated assets see their asset prices go up while the prices of goods and services go up. And people that don't have assets, most of that middle class just continues to get hollowed out. And people will be on the outside looking in that don't hold either equities or gold and silver or real estate or Bitcoin, which is a majority of the population. And the people that do in that middle of the economy have it in 401ks and IRAs that can't touch them for 30 years. So they don't get to realize that asset price accumulation while still having to go to the store and pay $10 for a dozen of eggs, or, going to the gas station and it costs them $100 to fill their tank. Like, they have all the negatives and none of the positives because they don't own individual equities. They don't own real estate. They're being squeezed because of how crazy.
Well, my concern is if the rates go down like they did, it's going to do kind of like what happened when we were giving out mortgages like Halloween candy, and everybody was being told they could afford a $400,000 house, and all of a sudden we had this housing market crash, back in, I forget what year that was. And, you had all these people like suddenly realize that they were, paying a mortgage on a house that
They're underwater in.
and then that led to a lot of debt. So in addition, a lot of bankruptcies and that stuff. So I just feel like, the Republicans were so critical of the Democrats that Sally Mae and all that stuff and did those cheap ass loans.
Freddie Mac, yeah.
Freddie Mac and all that stuff. And now they're going to turn around because it's like, oh, well, look how everybody will love us now because they can go and interest rates, they can buy an $80,000 truck. And because the interest rates are zero, and it's just we're stupid. We're stupid people when it comes to these kinds of purchases. I mean, I got a call from my dealership the other day trying to tell me how much my car was valuable to them, and they wanted me to cash in my 6-year-old car because that car was super in demand, and they could get me into a new car. And I'm like, but my car's not valuable, and I still owe like 2 more years of payments on it. Like, but there's a lot of people that are going to fall for that.
Check out this video real quick. It's what we're talking about in regards to asset prices. Look at this real quick, and then we'll talk about it.
We're at Alien Pizza Planet, right? And I'm looking at the prices and their pizzas and all that.
This is at Disney World.
Charging for a whole pizza, guys.
Look at that price.
16-inch pizza. Pepperoni,
16-inch.
$86. Cheese, $84 for one pizza. That's Disneyland for you guys. Let's go see how the pizza looks. So it's 93. I thought it was 80. Huh? There's a pizza right there, guys.
That's an $86 pizza.
This place is crazy, though. If you ain't got no money, dude, or if you ain't planning to spend money, Disneyland is definitely.
So, that's a bigger problem. I saw that video. I wanted to show it because we're going to talk about it. That's at Disneyland. Okay, so there's a lot of videos about Las Vegas right now that Las Vegas is pricing out the middle class, that they've raised prices where it's basically you got to have money, like serious money, to be able to go there, stay there, eat there. Like, not even the gambling aspect, just to have a meal and stay in the hotels and all that kind of stuff. That's Vegas. That's like, okay, you're treating yourself going to Vegas. Like, not everybody's into Vegas and doing that. Disneyland, if you're a parent, it's very difficult to get through parenthood and never once taking your kid to Disney World or Disneyland. You are the ostracized parent if you never give your kids that experience. Am I wrong on that? Is that far-fetched?
I would agree. Like, I mean, I'm a big Disney World fan. I've gone many times, and I love the parks. I love the experiences. And I always knew that it would be an expensive vacation.
$86 pizza?
But I never would expect it an $86 pizza. I know that food's going to be expensive. I go to a Sabres game, and we're in the Niagara Falls area, so I go to see a Sabres game. I know that a beer inside KeyBank Center is going to be significantly more than next door at the beer place that we go to after the game. I understand that.
And a water,
that's
yeah,
just
sure.
ridiculous. That's just ridiculous.
That's complete price gouging.
That's complete price gouging. Yeah.
And that's becoming, that is absolutely egregious. Like, we can all agree a pizza being $86 is just.
And let's be honest, it's probably not a very good pizza.
No, of course not. We're in an area too where we have, like, we're lucky. We have great pizza here.
I'm gonna have to bring pizza with me.
I know.
I go to Disney World.
But like, the greater conversation is like, is that an outlier, or is that coming to like a restaurant or a place near you locally? Like, if Disneyland's going to get away with $86 pizzas and charge that, and people buy that, what happens to like the rest of these places when they start to say, well, if they're charging 86, like, we're going to charge 56, which is still ridiculous. And then you just see the prices of everything going up because the market's being repriced. And everyday people making like the average, I think the average salary is like 60 grand in the United States. Like an average person makes 60 grand. How do you take your kids to Disney World?
It's it's the same thing, like whether it's concerts, like if, some group like Paul McCartney was just here in Buffalo, and other groups are coming, and or you go, everything is these events, these like, I think sporting events have definitely gone in the way of, they don't really want the middle class to come anymore. They just don't. They might have a cheap game on, St. Patrick's Day, or, a day off, or, Martin Luther King Day or something, where they'll do that type of thing. But it does seem to me that sporting events in general, these types of things, have decided that they just are going to rely on corporations and rich people to price out the average person. Like, it's getting ridiculous. Like, it's everything. It's anything that's entertainment based is getting to the point where they're pricing it to that point where the average that middle class person is going to really have a hard time doing it.
So we can get to the lead because we've pushed it off far enough. MicroStrategy is definitely dominating Bitcoin X and the news. MicroStrategy stock, I have a tweet up here right now. You can kind of, I don't know where it ended today. I did see at one point it was down like 16% today. MicroStrategy falls over 7% on the day, and I saw, this is before I looked, and it was double that, to its lowest level since October of 2024. The stock is now down 55% since October 6th, in one of its steepest declines on record. MicroStrategy announced earlier today that they are going to start holding cash on top of the Bitcoin. So the talk is that Michael Saylor is starting to capitulate a bit. As of when I saw it down 16%, the holdings of their Bitcoin made up, I think, 55 billion, and the price of the stock and the company valuation made up 45 billion. So the value of its Bitcoin was actually worth more than its value of its stock. So it's going in the wrong direction. The MNAV is less than 1, which would be like around 0.9. So things keep getting worse and worse. There's multiple different products that he has giving out dividends. Part of the reason why he's holding cash is to be able to give out a 10.75, I think he announced today, Misty dividend. I'm not well versed enough on all the derivatives of the MicroStrategy stock to speak eloquently on them, so I'm not going to try to pretend that I can, nor do so. But MicroStrategy is just getting absolutely obliterated. The stock is doing terrible. Us Bitcoin maxis, I mean, I've been pretty clear from the jump. My position has never changed. While I like Michael Saylor, while I like listening to Michael Saylor speak on Bitcoin, and I think he's been a great advocate for Bitcoin, I've never, since day one, owned one share of MicroStrategy, nor have I advocated for anybody to own any MicroStrategy. I haven't said not to. People can do as they wish. I'm not here to tell people what to do with their money. But if you're going to look for exposure in the Bitcoin ecosystem, why would you want a paper product? Why would you own MicroStrategy when you can just own Bitcoin in self-custody? Like, I've always been an advocate for Bitcoin in self-custody. Owning a leveraged product, and Michael Saylor tweeting about the Bitcoin yield that they're getting. You're not getting a Bitcoin yield. You own the stock. If the stock goes up, you make money. If the stock goes down, you're losing money. It's you own none of the yield. So it's looking pretty bad. And obviously, we're being in this little mini or maybe longer term bear market for Bitcoin. MicroStrategy doesn't perform well in that. And here we are in that atmosphere currently. So the price is getting battered. Much worse than the price of Bitcoin. MicroStrategy, like I said, MicroStrategy is down, 55%, where the Bitcoin price is down like 35%. So just holding Bitcoin, you're actually doing better than holding MicroStrategy, at least since October of 2024. we got another tweet here from the Kobayashi letter. This is absolutely insane, and this is kind of what I was just talking about. MicroStrategy's market cap is now worth $10 billion less than their Bitcoin holdings. MicroStrategy MSTR is down 12%. So at this point, it was down 12. Like I said, I saw it down 16 at one point, and 57% since October 6th. This puts the company's market cap at $45 billion. Meanwhile, MicroStrategy holds 650,000 Bitcoin worth $55 billion. In other words, MicroStrategy's market cap is now trading $10 billion below the value of their Bitcoin holdings. Even if you subtract MicroStrategy's current debt pile of $8.2 billion from their current Bitcoin holdings, they still hold $46.8 billion worth of Bitcoin on the net basis. MicroStrategy's net Bitcoin holdings are still $1.8 billion above their current market cap, not including any cash on their balance sheet. Can Saylor keep buying? Good question. Is he going to continue to be able to buy Bitcoin?
My question is obviously their MicroStrategy, they make software and they do all these other things, and have they gotten so much into buying Bitcoin that they forgot to focus on the business model? Like, it feels like the business model.
There was no business model. That was the thing. Michael Saylor was first to market with the Bitcoin treasury concept. His company was dead, dying, like literally dead man walking when he decided to make the pitch to his board. At the time, I think they had $500 million of cash reserves, and he was able to convince them to use half of it, $250, to buy Bitcoin, and then later on use the other $250 to buy, more Bitcoin. But the company was the stock was trading like a penny stock, a couple of bucks a share. It was a shit dead company, not producing much revenue, and the Bitcoin strategy was able to catapult that company into a stratosphere that no other company existed on. Michael Saylor turned into an evangelist that was preaching the word of Bitcoin, being interviewed by every single media outlet that would have him on, which made the price of MicroStrategy start to go up while the price of Bitcoin was going up. So it's been a Bitcoin company. Like, it's a Bitcoin it's not a software company anymore like it originally was, or a tech company. It's a Bitcoin treasury company. So when Bitcoin's price is going down, the price of MicroStrategy gets battered. Does that answer your
No, it does, because I knew that I only knew them because they held Bitcoin.
Yeah,
Like,
same. I didn't know who the hell they were before he started a Bitcoin strategy.
I think that's the problem. If your whole company's
That's the problem for every company that came after MicroStrategy. MicroStrategy's surviving because they were first to market. They have 650,000 Bitcoin on their balance sheet, which in a time where their stock is getting battered, you're seeing like the amount of Bitcoin they own is actually worth more than their stock, which is helping them survive. These other there's another company called Naka that is down like 98%. Like, they're absolutely getting obliterated, their stock. But they're trying to emulate the Bitcoin strategy, and they have a decent amount of Bitcoin on their balance sheet, but nowhere near the 650,000 that MicroStrategy has. So they're just not valued as highly as a company like MicroStrategy is.
It's funny because you would always tell companies always are supposed to diversify, and that's the thing. Like, if their whole thing is just acquiring Bitcoin, then the problem is when Bitcoin has these problems, you could, and it's not even a reflection on Bitcoin at this point. It's a reflection on your company's maybe like, what else do you got? What else do you do? Like, and that's the problem for anybody if you're all in on one thing. And I'm not saying they should be buying Ethereum. I'm just saying, like, maybe they should be acquiring other things.
No, they shouldn't be buying Ethereum. Well, I think Saylor's ultimate goal is to be like a Bitcoin bank. Like, he's going to be like the financial plumbing of the new age of finances for Bitcoin. That's his ultimate goal, I believe. That's why he's building up the treasury the way that he is, offering these derivative products like he is. And he's going to be that like place to go, or he wants to be that place to go of like Bitcoin lending, Bitcoin banking. Like, I think that's what he's trying to eventually transition to. His company's just got to survive up until that point. And I think there's a lot of chatter, and he's technically not the CEO right now. He's the founder and he's the CEO of the Bitcoin arm, but the CEO of the actual strategy company is another guy. And he was interviewed last week saying that worst case scenario, they would sell some Bitcoin in order to pay off their debt and satisfy the dividends on the derivative products that they have, which is something that, Michael Saylor has been preaching for years. Never sell your Bitcoin. We're holding forever, 100-year time. And all that sounds great. And I agree with it as an individual. But when you're running a company and you're, at the behest of shareholders, like, your strategy is going to have to shift in a time where Bitcoin's price is suppressed like it is now. And that's what he's facing. I have another tweet up here as we're kind of running low on time that I think is something that we should keep an eye on as well. I know I'm going to keep an eye on it. I saw this a little bit earlier, and I haven't done a whole ton of research on it to see the numbers behind it, but I'm gonna share it, and then I'm gonna look and see like what if the cost basis is actually true. But Quinton, unfortunately, .eth. I'm sharing a .eth, unfortunately, but it says Bitcoin has never dropped below its electrical cost. And Bitcoin's current electrical cost is 71 grand. So Bitcoin currently sitting at, let's take a look at where we're at, 86.3. It's dropped a couple hundred since we started filming. So 86.3 currently. The current electrical cost is 71,000, and never in Bitcoin's history has it ever dropped below the electrical cost. I would assume that's not a good thing. We don't want to see that. That would be really bad for miners. That would be really bad for the price. So we'll keep an eye on that. And again, liquidity's coming. How long can Bitcoin hold out knowing that the liquidity's coming? How low is the price going to drop before, liquidity starts to come back? The Fed will make its decision, which is practically priced in at this point, of it's going to cut or it's going to pause on December 10th, which is next week. The market's priced in 25 basis point cut, which will probably happen. So I don't think we're going to get that big of a move in any direction, because if they do the 25 that's predicted, it'll probably, if anything, drop a little bit. And then, we got to wait until May when Powell's out and the new guy's in. We may get a little bit of a move if Trump, and he said possibly he's going to announce the next, which I think would be in his best interest if he's trying to help markets, which I think he wants to do. He's going to announce who that next pick is going to be fairly soon. He said maybe before Christmas. So we may get a decision on the next Fed chair, which, if it is somebody that's very pro easing, will make markets go up. I think that'll be something that will be a positive. And even if the liquidity isn't necessarily there right now, the sentiment may shift a little bit and give markets, equities as well, a boost in the meantime. But we got to wait until May unless Powell steps down, which I just don't think will happen. I don't think Powell's going to step down. So we're a good 5 or 6 months away before an actual regime change. So we got to survive. Like, how much is Bitcoin going to drop before we get the actual liquidity coming into the market? That's what we're going to see. That's what we're kind of waiting on. We know that the liquidity is coming. We know easing's coming. We know we're getting a regime change, but how does Bitcoin survive until that happens? Like, is a 2x going to get us back to 100K? Like, do we drop to 50? Do we drop to 60? Do we get back to the all-time high? Like, that's kind of like what we're waiting to see at this point. That's the unknown. That's the uncertainty. That's the fear that's, running rampant in Bitcoin right now. People are afraid to buy because they think we're in a bear market. They think that, and if we're not in a bear market, they think we're at least in a mini bear market until May. And that's kind of just where we're at. Before we end the podcast today, I'll read this because I think this is pretty good to kind of reset things, to refocus, why we're all here. A good tweet that was shared by Mario Narfal when was it shared? Was it early this morning? Opinion. Bitcoin isn't just better than fiat money. It's the only honest currency left. In 2025, the same Bitcoin people who didn't understand in 2010 is worth more than the GDP of 90% of the world's countries. Meanwhile, the real, the dollar, the euro, still being printed like there's no tomorrow. The Brazilian, it's real, I'm sorry, real, not real. The Brazilian real has lost over 95% of its purchasing power since the Plano real in the 90s. The US dollar has lost 97% since 1913. That's not money. That's colored paper with dead presidents on it. Bitcoin is different because it's the first money in history with a real production cost. It's not faith, not decree, not political promise. It's electricity turned into unbreakable digital scarcity. As Elon put it, energy is the true currency. You can't legislate energy. You can't just pass a law and suddenly have a lot of energy. Bitcoin is based on energy. Governments can print as much fiat as they want. They can run the money printer until the paper runs out, but they cannot print kilowatt hours. To create one new Bitcoin, someone has to spend real electricity on real hardware in mining farms that consume more power than Argentina. Want to confiscate it? Good luck, they've tried. Want to inflate it? It's impossible. 21 million coin cap, full stop. Want to ban it? Countries that tried became international jokes and lost billions in investment. See China. Fiat money, on the other hand, remains the greatest wealth transfer machine ever invented. From the poor and middle class who hold cash to the rich and connected who buy real assets before the printer even warms up. And if you still don't get it in 2025, you'll definitely get it the next time your local fiat currency is worth less than toilet paper. Again, source, a peer-to-peer cash system, the great fiction, property, economy, society, and politics of decline. And then he tagged at Elon Musk in it. That's the thing that people don't understand. And people get caught up in all the FUD on the energy and mining and all that stuff. Energy is the currency. Energy can't be manipulated. Energy can't be created and printed. You have to do the work. Proof of work. That's what Bitcoin is. That's where ETH fucked up. When ETH went off proof of work and went proof of stake, it's never been the same since. Proof of work, proof of energy, you can't manipulate it. You have to do the work to get the reward, which is the ingenious of Satoshi and his creation with Bitcoin. In closing, I'll say, as Bitcoiners, stay focused, stay diligent. You know what you have. You know what you own. You know why you're here. The problem is fiat. The solution is Bitcoin. And as always, don't trust, verify. Thanks for watching. Be back at it next week for episode 115. Follow all the socials, like, and all the good stuff. Peace.